Inflation is the rate at which the general level of prices for goods and services rises. It erodes the purchasing power of money. When inflation is high, each unit of currency buys fewer goods and services. This means that your savings lose value over time.
Money kept in a standard savings account earns interest. However, if the inflation rate is higher than the interest rate, the real value of your savings decreases. For example, if your savings account earns 2% interest but inflation is 3%, your savings effectively lose 1% in value each year. Hence, protecting your savings from inflation is essential.
Real estate is a popular investment choice during inflationary periods. Property values tend to rise with inflation. This makes real estate a good hedge against inflation. When prices go up, so does the value of real estate. This can help protect your savings. Investing in rental properties can be particularly beneficial. Rental income often increases with inflation. This provides a steady income stream that keeps pace with rising prices. Additionally, real estate investments can offer tax benefits. These can further enhance your returns.
However, investing in real estate requires careful consideration. It involves significant upfront costs and ongoing expenses. Maintenance, property taxes, and insurance can add up. It's important to thoroughly research the market and understand the risks involved. Despite the challenges, real estate can be a valuable part of an inflation protection strategy. It offers the potential for long-term appreciation and income. By diversifying your investments to include real estate, you can help safeguard your savings from inflation.
Stocks are an effective way to protect your savings from inflation. Historically, the stock market has outpaced inflation. Companies can adjust prices to keep up with inflation. This maintains profitability and stock value. Invest through individual stocks or mutual funds. Mutual funds offer diversification, reducing risk. This mitigates inflation's impact on your portfolio.
Choose stocks wisely. Look for companies with strong balance sheets. This protects profit margins and your investment. Stocks come with risks and market volatility. Stay invested and diversify to protect against inflation.
Bonds are typically seen as a safer investment compared to stocks. However, they can be less effective in protecting against inflation. This is because the interest payments on bonds are usually fixed. When inflation rises, the real value of these payments decreases. Despite this, certain types of bonds can still be useful. Treasury inflation-protected securities, TIPS, are designed to protect against inflation. The principal value of TIPS increases with inflation, as measured by the Consumer Price Index, CPI. This helps maintain the purchasing power of your investment.
Corporate bonds can also be a good option. Companies with strong financials can offer higher interest rates. This can help offset the impact of inflation. However, these bonds come with higher risk compared to government bonds. It's important to assess the creditworthiness of the issuer. Municipal bonds offer another alternative. They provide tax-free interest income, which can be beneficial in high-tax environments. Some municipal bonds are also inflation protected. By including a mix of these bonds in your portfolio, you can enhance your inflation protection strategy.
Gold has long been considered a safe haven during times of inflation. Its value tends to rise when inflation is high.
Gold is seen as a store of value. Investing in physical gold requires secure storage and insurance.
Gold ETFs offer a convenient alternative without the need for physical storage. Gold mining stocks can provide leverage to the price of gold.
While gold can be a good hedge against inflation, it's important to diversify. Relying solely on gold can be risky.
Section 6. Current expectations for gold prices. The current outlook for gold prices is positive. Many experts believe that gold prices will continue to rise. This is due to several factors, including ongoing inflation concerns and geopolitical uncertainties. Investors often turn to gold as a safe haven during uncertain times.
According to a recent report by Goldman Sachs, gold prices could reach new highs in the coming year. The report cites rising inflation and increased demand for safe haven assets as key drivers. Other analysts agree, predicting strong performance for gold in the near future. However, it's important to approach these predictions with caution.
The price of gold can be influenced by many factors. These include changes in interest rates, currency fluctuations, and market sentiment. While the outlook is positive, there are no guarantees. Investors should consider their own risk tolerance and investment goals. Gold can be a valuable part of an inflation protection strategy. However, it should be balanced with other investments. This can help manage risk and ensure a well-rounded portfolio.
Understanding inflation rate expectations. Inflation expectations are crucial for investors. Experts predict inflation will stay high short-term due to supply chain issues and high demand.
The Federal Reserve monitors inflation closely. They may adjust interest rates to control it.
Protect your savings from inflation. Seek investments that outpace inflation.
Understand inflation to make informed decisions. Section 8. Diversifying investments. Diversification is a fundamental strategy for protecting your savings from inflation.
By spreading your investments across different asset classes, you can reduce risk. This helps ensure that your portfolio is not overly exposed to any single investment.
A well-diversified portfolio might include stocks, bonds, real estate, and commodities. Each of these asset classes responds differently to inflation. For example, stocks and real estate can provide growth while bonds offer stability. Commodities like gold can act as a hedge against inflation.
It's important to regularly review and adjust your portfolio. Market conditions and personal circumstances can change over time. Rebalancing your portfolio ensures that it remains aligned with your investment goals and risk tolerance.
Diversification also helps manage volatility. Different investments may perform well at different times. By holding a mix of assets, you can smooth out returns and reduce the impact of market fluctuations. This can help protect your savings from the effects of inflation. Section 9. Inflation-protected securities. Inflation-protected securities are a valuable tool for safeguarding your savings.
These securities are designed to adjust with inflation, helping to maintain their real value. The most well-known type is Treasury Inflation-Protected Securities, or TIPS. TIPS are government bonds that increase in value with inflation.
The principal value of TIPS is adjusted based on changes in the Consumer Price Index, or CPI. This helps ensure that your investment keeps pace with rising prices. Interest payments on TIPS are also adjusted for inflation.
Another option is inflation-linked bonds issued by corporations or municipalities. These bonds offer similar protection, but come with different risk profiles. It's important to assess the creditworthiness of the issuer and understand the terms of the bond.
Including inflation-protected securities in your portfolio can enhance your inflation protection strategy. They provide a stable and predictable source of income that adjusts with inflation. This makes them a valuable addition to a diversified investment portfolio. Section 10. Practical tips for protecting savings. Protecting your savings from inflation requires a proactive approach.
Here are some practical tips to help you safeguard your money. First, diversify your investments. Spread your money across different asset classes. This reduces risk and enhances your protection against inflation.
Second, invest in real assets. Consider investments like real estate and commodities. These tend to appreciate with inflation.
Third, use inflation-protected securities. TIPS and other inflation-linked bonds can help maintain the real value of your savings.
Fourth, stay informed. Keep up with economic trends and inflation rate expectations. This helps you make informed investment decisions.
And fifth, review and adjust your portfolio. Regularly assess your investments and make adjustments as needed. This ensures that your portfolio remains aligned with your goals.
By following these tips, you can help protect your savings from the effects of inflation. It's important to take a long-term perspective and stay disciplined. This will help you navigate inflationary periods and achieve your financial goals. Section 11. Summary and motivational conclusion. In conclusion, inflation can significantly impact your savings. However, there are several strategies you can use to protect your money.
Investing in real estate stocks, bonds and gold can help counteract the effects of inflation. Diversifying your investments and using inflation-protected securities are also effective tactics.
Current expectations for inflation and gold prices highlight the importance of proactive financial planning. By staying informed and making smart investment choices, you can safeguard your savings.
It's crucial to regularly review and adjust your portfolio to ensure it remains aligned with your goals. Remember, protecting your savings from inflation is an ongoing process. It requires diligence and a long-term perspective.
By taking the right steps today, you can secure your financial future and achieve your goals. Stay motivated and committed to smart financial planning.